Hi, this is Nick Katko, along with my esteemed colleague, Mike
DeLuca.
DeLuca, and welcome to this month's BMA webinar, where we're going to be talking about practicing PDCA in lean accounting. So let me just, first I want to do the technical check. If you need to download a copy of the presentation, it's in the handout section. And if you have any questions, please put them in the question pane. And we will try to get to as many questions as we can at the end. I also want to do the technical check. And if any of you can just sort of respond in the question pane, can you see us? Can you hear us? And can you see the presentation? All right. I just want to make sure that it looks like, all right, looks like we're all good to go. So let's get going with the presentation. Oh, okay. There's one more administrative thing. If you are a certified public accountant and you would like to receive one CP continuing education credit for attending today's session, please respond to the 3 attendance check questions. Stay logged in for 50 minutes and send me an email and I will be glad to prepare the certificate. So today's webinar is part of our Practicing Lean Accounting series, which is based on the book that Mike and I are in the process of finishing up with a expected publication date of sometime in the summer. We're not ready to commit to a date yet because we still have some work to do on it. So practicing PDCA is one of what we consider one of the foundational practices, which drives improving accounting processes and also drives lean financial management practices. Excuse me. So today we have 3 learning objectives for you. Understand how to use PDCA in daily lean management. Understand differences between the types of improvement activities which we're going to discuss, and then how do you apply PDCA in these improvement activities. So our agenda is pretty much going to follow the learning objectives. What is PDCA? We want to make that very clear for everyone. How do we use it in lean management? How do we use it for improvement? And then we'll wrap up and take some questions. PDCA is simply the scientific method as it applies in business. It also is a thinking habit. It's many, many things. You may not have, you may be familiar with this. Sometimes it's called A3 thinking, lean problem solving, but it's really a fabric of lean thinking. And and it follows the steps of plan, do, check, adjust, which Deming talked about 50, 60, 70 years ago. So what are the 4 steps? Excuse me. One is, what is the problem? What is the issue that we're trying to deal with here? What is the opportunity? We want to define it. We want to measure it. We want to have a goal. Okay, we want to understand, what's causing the problem, what is the plan to resolve that problem. So there's, the plan step in PDCA is very, very critical because we want to be very thorough and complete. What a lot of traditional type problem solving activities try to jump to solutions. They don't really study the problem. They don't quantify it. It's sort of like, here's the problem. We know what the solution is. So let's just put the solution in place. So PDCA PDCA is a little more rigorous. The do step, execute the plan. And like any experiment, if you think about the scientific method, which is conducting experiments, you conduct the experiment, and it could be an experiment. The action plan could be, we're going to try something new. The action plan could be, we know what to do, we need to put it in place. Regardless, you want to confirm the results of the action plan. Did we achieve what we thought we were going to achieve in the plan step? And we want to study this. We want to understand, if we achieved it, how and why. If we didn't achieve it, how and why. And then there's the adjust. We determine the next steps. If we determine that our action plan was successful, what do we have to do to ensure that, for example, it's repeatable in a process? If it wasn't successful, what do we do? Do we move on? What did we learn? How do we maybe redo the process? So it's fundamental in lean thinking. For example, if you have been in a formal, like multi-day Kaizen event in a company, that is based on the PDCA methodology. So in lean accounting, what we want to do is incorporate PDCA into both our daily lean management practices in our accounting processes, and also use PDCA as a foundation for improvement. So let's now talk about daily lean management. Your accounting processes, payables, receivables, month-end close, payroll, they all have established work routines, primarily based on deadlines. And if you work in accounting processes, you know how payables work, you know how receivables work, you know what has to be done. We got to get the bills out, we got to pay the employees, we got to close the books. All this is pretty much established thinking, and most payables processes work the same in all companies. And so what we're trying to do here is incorporate PDCA thinking into these work routines. For example, in most accounting processes, and accountants are very good at this, firefighting, meaning we discover a problem or an issue, maybe an invoice is not properly completed to process an accounts payable. And so we have that this invoice needs to be fixed. And so we go through this effort to find out what's wrong, contact the supplier or contact purchasing. Eventually the invoice gets fixed. So accounting discovers problems and issues, and the traditional approach is we fix them. So this is sort of like business firefighting, okay? And accounting is good at this. But what we want to do with PDCA is move from firefighting to fire prevention. So it's not so much fixing the problem. What we want to do is learn how to make the necessary changes or improvements to maybe prevent the problem from occurring in the future. And so that's part of the PDCA daily lean management process. So what is PDCA in daily lean management? So the plan is, sorry, getting all tongue-tied here. What must we do by when? Think about it in terms of delivering value. What value needs to be created in an accounting process today? This can be what output needs to be completed. For example, we have to pay the bills today. It might be progress. What progress needs to be made in terms of creating value for the customers of the process? The do step is status. Okay, what's the stat at any point in a day? What's the status? Okay, what's in process? What's the next item, or what's the next task to be done? What are the problems and issues, and what has been completed? What we're trying to discover here is what is interrupting the creation of the value. We know what needs to be done. What's getting in the way? The check process is, how did we do? This is the idea of having basic lean performance measures, safety, quality, delivery, and cost, to quantify how did we do today. We don't want this to be sort of a judgmental, oh, we think we did well today. We want this to be very objective, based on performance measures. Did we deliver value today? That would be sort of delivery. We were supposed to complete this work today. Did we complete it? Yes or no? If we didn't, why not? What were the reasons? That's what we want to learn here. And then the adjust is, how can we get better? Whether it is how can we make up for our deficits today? What do we have to do to respond to problems and issues? What are the trends that lead to further improvements? Think about daily lean management as a lean accounting classroom. This is where the accounting team learns. They study, and they study the process. They learn, and you really discover where the problems and issues are in an accounting process. We always, recommend getting started like this in any accounting process, because accounting processes, payables and receivables, they're high volume. Okay, there's a lot of transactions going on, and so it's sort of difficult to try to do a process map. It's not impossible, but it's difficult to do a process map and really have it reveal all the problems and issues because of the volume of transactions. So that's how daily lean management works. We're going to do an attendance check next, and then Mike's going to show you how one company used daily lean management in their month-end close process. So I need to navigate to the polling question. I'm going to launch the poll, and please respond. I'll give you about 25, 30 seconds. Alrighty, looks like everyone did well. All right, so now I am going to turn the presentation over to Mike.
Thanks very much, Nick. Like Nick was saying, we really want to illustrate in today's discussion how this continuous improvement thinking is part of the daily fabric of the lean operations, and that it's really important for us to bring this thinking into accounting and finance. And one of the things that we're hoping to convey is that PDCA, or this continuous improvement cycle, is not simply focused on, oh, I have an improvement opportunity, I'm going to pull the PDCA tool out of the toolkit. It's really a daily practice of running the business. It becomes part of the fabric of running the business. And I think I really like your metaphor, Nick, of the daily lean management is the classroom, what we're learning every day. So we're going to talk about a specific example where an organization applied PDCA thinking to improve its close process, but then used it on a daily basis to plan the work, to do the work, to check in process whether or not that day was set up for success so that they could make adjustments. And one of the benefits of using this daily management PDCA mindset is that we don't get to the end of the day and say, well, that didn't go the way we wanted. We have an opportunity to do midpoint checks to ensure that we can still set ourselves up for success during the day. And the other thing I want to encourage you to think about, we're talking about a month-end close process, which is largely transactional, but the team that I led in my finance leadership role, a significant portion of their responsibility was financial planning and analysis. Those are longer-term analyses, projects in many cases. And so to Nick's point again, this isn't just thinking about transactional processes, but ensuring that today's work is clear and that we're making adequate progress. So for this team, their pre-improvement current state in month-end close was that the month-end close process took a very long time. They started at day -5, which is 5 business days before the close of the prior calendar month, and they finished 27 business days later, which was in the following calendar month. So if you think about that, if we're in the process of closing the books for April, right? So that started 5 days before May. For this organization, that process continued into June. That meant for a number of business days, the close process overlapped from the prior month to the current month. The problems with this were twofold, right? If we think about, okay, we're solving a problem, why? Why does it matter that this is so long? Well, there are two main things. One, and I think probably one of the most obvious ones on its surface, is there was significant overburden on the staff. But the other one is this company was a large organization, primarily grant funded. In order for them to get revenue, they had to submit monthly reports to their grantors based on closing expenses, closing the books from the prior month. Since it took them so long to close, it took them that much longer to get revenue. So it was a cash flow issue for them as well. So that's why it was important to solve to this. Now let's talk about once they had done the improvements, once they had identified the wastes, thought about all of the ways, to Nick's point earlier, they could avoid firefighting and move to fire prevention. And I just want to connect again to this idea that, you know, we have daily work routines. Whatever your role is in accounting and finance, you have daily work routines. And we talked about this in our last webinar, the foundational practice of seeing the waste in our daily work. We become so accustomed to the wastes that we deal with that they're a natural part of our work routine. And whether it's correcting issues or tracking down data, we get really good at it. So we really want to think about ways, and this team did. They improved Nick, let's go ahead and go on to the next slide. They improved the process. They cut it basically in half. So they were able to close the books, and there were two different parts of the close process. They were able to close expenses in order to report to grantors within the first calendar week, and then there were other internal close elements that they needed to complete for internal reporting, and so they completed those in the second calendar week. That was their first round of improvement. Now, I haven't been in touch with them. They may have continued to transform it since then. But what we want to look at here is, okay, great, we improved a process, but to Nick's point, in the adjust phase of the improvement cycle, plan, do, check, adjust, if what we did as an improvement worked, how do we stabilize it? How do we make sure that it's the new standard, that we follow it, and that we can then build on it for further improvement? So what they did was they organized their daily rhythm for the close process in particular, and they use, like a lot of organizations do, a daily stand-up meeting or a morning huddle. 5 to 10 minutes where they basically plan the day. And so each member of this accounting team, 8 to 10 people, would go around and say, okay, here's what I need to accomplish today in order for my part of the close process to be on track. And you can see these swim lanes here. This is organized by a calendar, so that this was their part of their visual system. They'd stand up in the morning and they'd say, okay, where are we today? And you can see the today is marker all the way over to the right. So you can see this is at the end of a close cycle. when they were having their stand-up meetings. But what they did was they said, okay, what's today's work for each person? What do you need to be successful? Are we on track? How did yesterday's go? Is there anything that we need to, is there any troubleshooting that we need to do? And then in particular, did anything come up that any issues come up that we need to put on our idea board for ongoing improvement, right? Do we need to do more root cause analysis around why something still isn't going to plan? All of the green check marks were, once a particular portion of the cycle was completed, they'd put the check mark. It's a green check mark if it's within target. So you can see those swim lanes on the monthly planning calendar, or that's the target. That's when that particular part of the close process begins and ends. So if you can see, the second swim lane is accounts receivable invoices are begun to be worked on a certain day and targeted to be completed 5 business days later. They were a day early in this particular cycle. So this is part of the plan, and that sets them up for that day's work. So now if we go back to the check and adjust, in this visual, again, this was part of their team's visual board. You could see they were trending over time. How are we doing from 1 month to the next? So for each of these tasks, for each of the different swim lanes, what's the range of business days when it should begin and is targeted to close in order for the close process to work? And then what actually happened. And so you can see for the prior month, they had whether or not they completed that particular task on time, or if it was late and how late it was. And so they can use the reds to gather themes and then begin to do some more problem solving, right? Once you stabilize the best practice, you can continue to improve on it. And for the current month, they would just handwrite in what their actual experience was, so that they could go back and then update this report. And then you would see for the next month, the June 2018 close, they would be handwriting in again. So this is part of the check process. And again, to Nick's point, and we'll talk about this more next month in the foundational practice discussion on measurement, it is critical, whether we're talking about an improvement process or just checking our daily capabilities, that we're looking at data to understand what's going well, what's not going well, and begin to understand themes around why. So let's go ahead and talk about the adjust process. No, one more on check. Thanks. Remember, the 2 goals they had were not just to improve the timeliness of the close process, but to reduce overburden on the staff. So this was, a lot of times we talk about, well, gee, it's hard to measure, and there are a number of different ways I've seen teams measure it. This team chose to do something, again, simple. It worked for them. They basically, at the end of the close process, each day they would check, and at the end of the close process, each person gave themselves a green or a yellow. Green, this really felt manageable, sustainable. I felt good about close this month. Or yellow, no, I felt like it was harried. I was still behind the 8 ball. I was still doing more firefighting than fire prevention. But then what they did was they added notes around specific elements, and you can see this isn't quite lined up because it's a very large visual on the wall, and I tried to get bits and pieces of it on the slide. But then they would add notes around what their experience was, so they could use that in they had a regular team meeting where they talked in more detail about opportunities for improvement around burden. So those are the 2 elements of check. And are we sticking to the timeliness targets, and are we reducing the process burden? In terms of adjust, they had a team Kanban or a team idea board where they had ideas that they wanted to tackle. Those were in the to-do. Those were generated in both the daily check and then in the end of process reflection. Ideas that they were currently working on, things that were in testing, meaning that they were testing a new process, and then what was done. So this is their plan, do, check, adjust. But you can see how the team really incorporated, once the process was improved and stabilized, a daily rhythm to planning the work, checking the work, and then using that to collect additional information around, is it stable, is it working, are we setting ourselves up for success, and what additional things could we focus on for an improvement. One of the things that I've talked a good bit about during this section is their use of visual systems, and it may go without saying, but I really want to emphasize the importance, and whether you're doing this, I know a number of teams have shifted to managing virtually through not having so much co-located work, but whether you're using a paper or a virtual, an on the wall or a virtual visual system, it's important to have different elements of a visual that can support your management. Now for this team, they used the calendar view. It made their target actual gap easy to see, right? Again, that's specific to this process. You might have another view that makes, if you have, if you're during the time of the month when you're either sending out customer bills or processing invoices, you might have a daily volume or an hour by hour volume of invoices that need to be coded, processed, whatever that might be. So some view that makes today's work easily visual so you can plan it in the morning and check it during the day, right? They also really ensured that they were looking at trends over time. Are we continuing to have a process with closing payables? Are we an issue rather with closing payables? Are we really stable with sending out those revenue reports to the grantors? What is stable? What is unstable over time? Was something just a blip, or was it a theme or a trend?
Yeah,
An important part of, go ahead, Nick.
no, I just wanted to emphasize this, target actual gap. Um, Accounting's work is pretty much invisible. It's done in systems on computers, and it's just, I can't stress enough that when you make the status visible, like in a calendar view or anything like that, it really it helps reveal problems and issues. It's not about getting our work done in whatever way we can. It's about getting work done the right way. Go ahead.
No, that's great. Another thing that's really important, and I've seen some teams struggle with this, is that once we get daily management in place, if we're not using that in a quick and easy way to mine ideas for continuous improvement, the team can begin to disengage from the daily planning process. It needs to continue to serve them. It needs to have a payoff that helps them continue to improve their work and basically get better results for the organization. And simple visual measures of workload to we need to challenge ourselves to understand, especially for teams like my team was a salaried. So it's not like, oh, I had to work overtime and I have something that's really calculable from the perspective of we paid 3 hours of overtime last week. If you have salaried staff, or either way, but in particular, if you have salaried staff, it's important to think about how can you still work with your team to understand whether how would they know if their workload is manageable or if they're experiencing overburden. So
Yeah, I just wanted to add one more thing before we move on to the next slide. In my experience, it takes a team about 30 days to really get used to daily lean management. And so you sort of have to take the first 30 days and consider it a pilot, and what's working, what's not working. You might create a visual board, and then you might say, oh, we need to make some changes to the visual board. But and it can start out pretty rough if people don't understand what they're doing and why they're doing it. But the more that you do it, the better you get at it. And typically within 30 days, people are the team is very, very comfortable with it.
Right.
And, if you have a large accounting department where you have a payables team, a receivables team, and a payroll team, you could have daily lean management by team. If you have a smaller accounting department where the team, they wear multiple hats. Sometimes they're working in payables, sometimes in receivables, things like that. You may consider just more of a departmental board of what needs to be done today.
Great. So like Nick was saying, go ahead.
I'm sorry, go ahead.
No, it's fine. This is, as we transition into the next attendance check, what we're really, we're really putting daily lean management at the top or the center, because without that, without stability of process and stability of a daily rhythm, a daily routine for planning, checking the work, understanding how it's going, using data to inform our understanding. And when we try to do improvement, we're doing it with no context. We're doing it with well, I shouldn't say no context, but we're doing it with potentially insufficient context. So daily management helps us reveal problems and issues. Those may be simple. We can actually deal with them on a daily basis, and we'll give some examples of those. They don't require 5-day Kaizen events. They don't require 3-month-long improvement projects, but we will reveal complex and recurring issues. In accounting and finance, just like in many areas, our work is cross-functional. We will find issues where we're the receiver of information that's imperfect. We'll talk more about that, but it helps us reveal these different types of problems that we can either take action on right away, or that we need to be more planful in taking action on. And so as we transition to next attendance, I think that's what's next, right? Is attendance, yes. So
Yeah.
then we'll talk more about some specific examples.
All right, so I'm going to launch the attendance check poll. Give you about 25, 30 seconds to respond. All righty, here we go. I'm not going to share any results. Let me go back to the presentation. So now we're going to talk, but now we're going to sort of shift. We're going to talk about the using PDCA for improvement activities. It's important to for lean accounting. It's important to sort of create some kind of framework or structure for your improvement activities. Here's one thing. Once the team gets lean thinking and they understand waste, and there's typically a level of excitement. Okay, we want to start improving. Okay, and so not all problems and issues are equal. So it's good to have some level of a framework, because we don't want our improvements to be random. We also don't want the Band-Aid approach. Okay, we don't want to just think we're solving a problem when we're just putting Band-Aid on it and it's still going to occur. We want to fully solve the problem using PDCA as a thinking process in terms of understanding the cause of the problem and what the solution is. So think about this as a general framework to be able to evaluate problems, to be able to sort of estimate the level of effort to solve problems, and also to sort of prioritize work, because there's also a tendency for people to go after the large problem first. If we just bought new software, we would solve this problem in accounts payable. That's not the thinking we want. We want people to solve problems. We want people to think about this. Okay, and so this is a general framework, and the simpler problems we want to incorporate into the daily work. So as part of our daily work responsibilities, if we have a simple problem, that we can solve, we need to solve it. Now, we may not solve it in the sort of like one meeting, but it might take a few meetings to go through the PDCA process to solve the problem. But it's just part of our work. And then when you get into the more complex problems, this is where you really need to plan. So this overall process improvement, what is our goal for improvement in like 3 months or 6 months? And then you typically create scheduled events. So, okay, we're going to take a day, for example, and we're going to try to solve this one problem. Then there's the innovative transformational changes that are sort of more radical redesign of the process, which, that takes time to get to. And really the focus here should be the focus in lean accounting. Get started with quick wins and daily improvement, progress to process improvement. If you can do that, you're doing great.
And
So
as the
what we
higher
want,
you are,
go ahead, Mike.
I was just going to say, the higher that you are, the upper two sections of this table, quick wins and daily improvement, it will be natural for many teams to come up with the improvement ideas in the beginning that are like Nick said, bigger nuts to crack. They may be cross-functional. They may not just be the system that you would like to be able to bring on in order to automate a process, but it may be something like the inputs that you get from your upstream suppliers of information, whether it's managers or sales or whoever that might be, are faulty, and you spend a lot of time correcting. And what we're encouraging you to think about is that there are very concrete ways, and you can look back at the material from the first two foundational discussions on value and waste. There are very straightforward ways to get the team focused on things that they can control right away. That's the quick wins and the daily improvement that where the team can create its own momentum, free up its own capacity so they have more time to think about and work on some of the more complex and cross-functional changes.
So what we wanted to do now is give you examples of these types of improvement. That's sort of the best way to explain this. This sounds very theoretical, but we felt like if we give you some real examples that we either have done ourselves or experienced in working with clients, you'll get a flavor for sort of the level of effort. So, for example, and Mike and I are going to be both talking because some of these are his examples, some of these are mine. So I did some work at a local nonprofit, and the president of the nonprofit, he complained about how long it took to close the books. It was very similar to Mike's example that it took weeks to close the books, and actually there was actually some overlap. And one item we discovered is that there were a few employees that had a company credit card and they submitted expense reports, including the president. And like most employee expense reporting, the people who had the cards were not always timely in submitting their expenses for the month. So what accounting did is they would hold accounts payable open until they receive the expense reports. And because these were recurring expenses, okay, and what we did is we just did a simple quick win is we said, okay, we're just going to record the expense report in the month it was received rather than trying to accrue it, because the expense reports were not significant. They did not really change the financial results. And just that simple change reduced the close time anywhere between 5 and 10 days, because that's typically how late the expense reports were submitted. And in another example, in a manufacturing company, in terms of detail in their cost accounting system, they had 6 labor rates and 8 overhead rates that they used in their costing system, because that was the number of fields that the software system allowed. So they said, well, we're going to use them. And it created a lot of complexity in understanding the costs, and people questioned the rates. And through our efforts to simplify things, they going to one rate, this was a fairly small company, going to one labor rate and one overhead rate just reduced a lot of complexity in terms of the rates and setting the rates, in terms of deciding what the rates are. Mike has a couple here.
Yeah, I'll just speak to one of these, and the daily practice that brings these up are, and the reason that they're quick wins is because teams will often start their practice by saying, okay, let's just learn about the 8 different process wastes and see if we can identify examples of those every day. So a really simple one, an accounting team was trying to learn the 8 wastes in practice. And so they said, okay, we just learned about these process wastes and learned how to observe them. And so let's just watch each other do a really simple task that we do all the time. We scan and electronically file invoice documentation. Let's just watch. There were 6 or 7 of these folks. Let's just watch how each other does this, and then we'll take notes on the waste that we saw. And they came up with lots of ideas to improve the process. But I mean, one of the quick wins, and it sounds kind of self-evident, but only about half of them had 2 monitors. And it was just so apparent to them that the people who had 2 monitors were so much more, not just efficient, but had far fewer errors in terms of the coding and filing, that they're like, okay, well, that's easy. Let's just get 2 monitors for everyone. Okay, may not seem like a big deal, but your teams will find things that are like that just by observing the wastes that they and their colleagues go through on a daily basis.
So when it comes to daily improvements, one thing that I did many years ago at Bullard, we were measuring defects in accounts payable, invoices that had problems and issues that we couldn't process. And it became very apparent that the primary type of invoice were were based on MRO purchase orders, not the raw materials that we used. They were pretty much fine. So myself and the purchasing manager, we decided to co-locate MRO purchasing in accounts payable. And we just sort of assigned this team the responsibility to figure out what's causing the defects and reduce them. That was it. We had a defect measure, but there were no clear instructions, do this, do that. It was up to them to figure it out. And within about 6 months, there was a 70% reduction in defect. It was just a matter of them going type by type to do it. And they did it in the normal course of their work. Mike, go ahead.
So I think many of you, if you've heard me speak before, might have heard this example. But when I was leading the team at my organization, a lot of our work, like I said, was financial planning and analysis. So we produced monthly reports for an audience of either 1 or thousands of people in the company, and there were over 400 reports that we were produced on a recurring monthly basis, and so it's a significant portion of our capacity. And we had tried, and this may resonate with many of you who do similar work. We had tried many times over the years to reduce, to say, okay, do you still need this report? We had tried things like, well, let's just stop sending them out and see if people miss them, but people always wanted their reports. And Lean gave us the opportunity to have the conversation in a different way, which was to sit down with the end users of the reports and say, if everything this organization is doing needs to be pointed toward improving value for the end customer, how do you use this report that we give you to improve end customer value? And it was a very different conversation, very productive. And so we didn't make any unilateral decisions. It was collaborative with the end users. But as a result, we were able to eliminate 75% of the recurring reports that we did, and then improve other ones. So that was, again, not a process change, not a really complex process change, but a really intentional use of lean thinking to eliminate really non-productive, created a lot of unnecessary inventory and overproduction through those reports.
All right, we'll move on to some examples of process improvements. And again, at Bullard, like in most companies, nobody liked the annual budgeting process. It was very traditional, looking at each line item by month and all that. And so, myself and some of the other senior leaders, we just, came up with, how we wanted to reduce it. Okay. That the idea was we wanted to reduce it down to maybe about 3 weeks from whatever it was, which was like 8, 9, or 10 weeks. And so what we came up with is, okay, let's eliminate the line item budget and just set a departmental budget, okay, a bottom line number. And as opposed to having that sort of rework loop of a manager submits a budget and then it goes back and forth between, before it finally gets finalized, we just sort of said, we're going to give you a recommended budget based on current performance but based on the numbers in the current year plus what we at a high level expect or want in our financial projection. And this was very high level. And so, for example, it would be, okay, here's your budget, and we're budgeting expenses to go up 5% next year. So this is actual for this year. Here's 105% of actual. Here's your budget for the department. If that's good for you, you're finished. If you need more, then you have to talk about what you need and why you need it. Anyway, and it everybody liked it, and it was very simple and easy, and besides the time frame, it eliminated a lot of the back and forth stuff. Go ahead, Mike.
So we talk a lot about the transactional processes that we do in accounting and finance, but all of the work that we do is knowledge-based, and some of the work that we do is not necessarily a single transaction which has a cycle time, and there are very measurable aspects of doing that. So like I said, a lot of our knowledge-based work may be more things like, hey, folks on the finance team, we need an analysis around expanding the footprint of a facility, or expanding hours of operation of a particular facility or service, or should we lease or buy? And of course, my organization was healthcare. Should we lease or buy that MRI equipment? Should we contract or provide a certain service ourselves? And so there are a lot of business case analyses which were, meant that at any given time we could be working on dozens and dozens of different analyses. And so we had to think about a way to really manage that more from a daily lean management perspective. And so we mapped out the process. What happens when we get a request? How do we get information about it so that we know what to do? How do we prioritize it? How do we assign it to the right resource? How do we produce and deliver it? And we learned a ton in terms of how the beginning of the process, we can error-proof the information that we get so we're delivering the right analysis. But we use that to ensure and incorporate it into our daily lean management to limit the work in progress. Because in knowledge work, if you're working on 10 different analyses and you're constantly switching gears and trying to do all of those different things as opposed to getting as close as possible to one piece flow, bringing those concepts of lean production into knowledge work really helped us limit our work in process, but ultimately was more impactful in delivering analyses in a more timely fashion with higher quality, because we brought, to Nick's point earlier, we brought visibility to the daily work, right? No analysis languished for months, just kind of waiting to be finished anymore, because we knew where it was and we knew what needed to happen in order to move it forward in the process. And we already talked about reducing the close cycle. And then the last example is a cross-functional improvement that I helped a healthcare billing team facilitate. Was cross-functional, lots of different cross-functional processes in healthcare billing, but their initial improvement was an improvement in days of revenue outstanding by 15%, and they've continued to work on it. This was a number of years ago. So we've got one more set of examples.
Yeah, again, this is something that I did, combining the payroll accountant position with human resource administrative position. The payroll accountant that was on our team was really, really good. Made a lot of did a lot of quick wins in terms of payroll, and sort of turned payroll into a part-time job. Okay. Because there were less problems and issues to deal with. And at the same time that was occurring, the human resource administrator was reaching retirement age. And so I talked to the director of human resources about, the situation with the payroll accountant. And, we decided to combine those positions and avoided hiring another human resource administrator. And then also worked with a company on a supplier portal, which was a system feature that allowed their suppliers to submit invoices in one form or fashion. That eliminated a lot of problems where invoices were going to who the supplier had worked with, and then that employee would accidentally forget that they had the invoice and had to submit it. Go ahead, Mike.
Yeah, and this next one of our biggest transformational improvements was completely changing our financial planning processes at the organizational level. I could give an entire talk on this, which I won't now, just given time. But what I would like to do is reorient this to our foundational practices. If we do a budget or an annual financial plan, what's the value? Why do we do that? What's the waste that we encounter in delivering that? And then how would we improve the process? And what we ultimately did that was more transformational is we got down to the core of why do we even do a budget? What is the purpose? How does the organization benefit from this annual financial plan? And we said, if we used a blank slate and started from scratch, we could create different but much more efficient and timely processes like quarterly forecasting, completely revamping our reporting that provided higher quality and more timely information. So what we did, if you think about the annual budgeting process, we had hundreds of managers working on budgets for 3 to 4 months out of the year. We started in July and didn't wrap up the budgeting process until it went to the board in November, and produced tens of thousands of lines of detail. So from a forecasting perspective, we were able to replace those tens of thousands of lines of detail with 16 lines on 2 Excel spreadsheets. I mean, so again, like I said, I could talk about this for an entire webinar, but just the significant capacity that was freed up, not just on the finance team, but more importantly, management was able to focus all of its time on continuous improvement as opposed to trying to figure out budget templates. So this last slide is really just a reference for you as you come away with this, with the slides, to think about if we experience these different wastes that we talked about in our foundational webinar, foundational practice around identifying waste last month, what are some types of improvement approaches that we could take? So again, just use this as a reference to come back to and generate some thinking.
All right, so let's do our last attendance check. Launch the poll real fast, then we'll wrap up our webinar. All righty, thanks for responding. Close the poll. So, what's important to remember is that, PDCA in lean accounting, it is it's sort of the act. The action is applying the PDCA steps in the work routines of your typical accounting processes: payables, receivables, payroll, month end. It's also a thinking habit. Okay, and this is where we want the accounting team to think this way. And the more you do it, the better you're going to get at it. It may seem a little foreign at first. And that's where daily lean management comes in. We're going to practice daily. We're going to start discovering and revealing problems and issues which we can fix quickly through our daily work. And then we're also going to discover the recurring problems, which we might have to study a little more and focus more formal process improvement efforts on that. Putting daily lean management in place first makes the process improvement work better. So Mike will talk about some getting started ideas.
Sure. I mean, we encourage you to start with a daily huddle, a daily stand-up meeting, and keep these to 5, 10, no more than 15 minutes. The idea of a daily planning huddle and practice is not to have a problem-solving meeting, not to get into the details, but basically to say, what's on deck for everyone today? At the end of the day, what does success look like, which may be different? How can we make that visible, right? And then how can we learn from how it goes to start to collect some themes? We want to start collecting data. Oh, we're running into this all the time. Let's just start collecting data about one of the barriers that we run into on a frequent basis, but an informal daily practice to begin to make the thinking a habit and provide the team with information that is data-based, not just anecdotal about what opportunities for improvement there are. And then run an experiment in one process. Keep it simple, keep it something that's within the team's control, and don't necessarily start off with something that's cross-functional and complex. Run an experiment that the team can do. But again, most importantly, this idea of the elements of daily lean management, the informal huddle, a visual, some kind of a visual, whether it's virtual or on the wall if the team's in a shared space, that you can test over the course of a month, and then reflect with the team, what was the benefit? And the most important thing is to stick with it. Don't just say, oh, we didn't like it, let's not do it anymore. Say, okay, what elements did we like? What elements didn't work for us? And then what's the next evolution? But it's really, we had to stick with it. It was like Nick said, it was clunky in the beginning.
Yeah. We're going to do a few wrap-up slides, but there was one question which our friend Benjamin in England asked: is there any relationships between PDCA and Kaizen, and how does it apply? I hope we sort of explain that through this webinar. You know, any Kaizen event, any sort of improvement event that follows the standard work in lean that's in lean thinking, it follows the PDCA process.
Mm-hmm.
And so you know, it's the PDCA process is very woven into the fabric of improvement events. So that was the one question. I hope that helped you, Benjamin. If not, please send us an email and we can talk a little more. So just to wrap things up, you're going to get a survey. It's actually 7 questions, not 5 now, but please complete the survey. That helps us to perform PDCA on our webinars.
Yeah.
And as a final reminder, if you want continuing education credit, please send me an email and I'll get you a certificate. Upcoming events are, we're going to talk about lean measurement in lean accounting on June 9th. I have a lean management accounting online training and certification course that's going to be May 25th and 26th. It's being run through a lean consulting company that I work with. And so if you want more information about that, you can get a BMA Level 1 Lean Management Accounting Certificate. It's 8 hours over 2 days, 2 4-hour sessions. Send me an email. I'll give you the details and explain how to register. And we're going to have more webinars for the second half of the year, more monthly webinars announced in the coming weeks. And if you'd like to contact us, here's how to do it. Sorry. And don't forget, next Wednesday is the monthly Lean Accounting Community Chat, and there's how to register. So we're at the top of the hour. Thanks for attending. Hope this was helpful. If you have any questions at all about the webinar, please contact us and we'll be glad to discuss with you via email, a quick Zoom chat or whatever. And we hope to see you again at future BMA online events. Have a good day, everyone.
Thanks, everyone.